We're live. All right, guys, looks like we're good. All right, so we're live on YouTube, live on Facebook. So if you guys have any questions, if any of you guys are new here, feel free to put your questions in the Q&A or in the chat, and I can answer, pretty much any questions you guys have related to trading, K2, the strategies, or any of the indicators. But just to get started, I'll just scan through all of the pairs real quick. I'll see if there's any entries coming up for the next 4-hour candle close. And then I'll reanalyze, our active trades right now. Like I mentioned earlier, we still have our Euro NZD trade active right here for a buy. And we're about to hit TP2 right here for 50 pips. Also, we have our NZD CHF trade also active for a sell. And we're almost at TP2 for 25 pips over here. They're both moving parallel to each other since Euro NZD. We're basically predicting that the NZD is going to be weak, which is, pretty much what's happening here. If you guys aren't familiar with how the pairs move, generally, if price is moving up, that means that the first currency is stronger than the second currency. Opposite of that for NZD CHF right here, you can see price is going down. So if price is going down, this generally means that the second currency is stronger than the first. So with this, they both move parallel. Right here, we're anticipating the euro to be stronger than the NZD, which is why price is going up. Similar with NZD CHF, we're anticipating the CHF Swiss franc to be stronger than NZD, and that's why it's coming down. So the market just reopened from the swap spread, so we're just going to give it some time. It's probably going to take maybe a couple hours for it to actually make some movement, but it looks like it's eventually going to hit TP2 right here. It's not too far from it. Similar with Euro NZD over here. I should have called Euro AUD over here. We would have hit TP2 over here. This is something that I identified earlier. I'll go over the strategy later, but unfortunately I didn't call it. I just felt like it was a risky trade, similar with AUD CHF over here. If we took both of these trades, we would have been, pretty deep in profit. You can see that they have the orange flags next to them, and that means that I was looking at them earlier, and I was anticipating on taking these trades, but it just looked too risky for me. Unfortunately, we didn't take these trades. Even this one for GBP NZD, they all would have been in profit. So it's all good, but we'll catch the next ones as they appear. But yeah, so if you guys have any questions, feel free to put them in the Q&A. Otherwise, I'm just gonna go down the pair list, and I'm gonna see if there's anything that we can enter off the next 4-hour candle. So let me get started with odd CAD over here. Let's see. So nothing really much right here. Let me turn on the pivots. And if you guys aren't familiar with how the K2 pivots work, generally when price is above the pivots and the pivots are all angling in one direction and they're spread out like they are right here, this generally indicates that price is trending up. Once price is below the pivots like it is right here, opposite of what I just described, that indicates that price is trending downwards. So obviously, the way we trade at K2 is we usually like to trade in the direction of the trend. So right here, as price is below the pivots, we generally would be looking for a sell. The only problem with the sell here is if we get a sell signal like we did right here, you can see that it dropped pretty nicely if we took this trade, which I think we did, for about 45 to 50 pips right here. The only problem with this right here is if we get a sell signal, it's going to be entering the K2SR zone. And if you guys are familiar with how the K2SR zones are, basically what they do is they act as points of rejection. So generally if price is to reach the zone or even down here like it did previously, odds are it's probably going to reject off it, which is why we wouldn't take a sell. But since price is trending down, for the most part, we'd probably want to take a sell if there is an entry. However, due to the closeness to the K2SRs, we probably wouldn't take this trade. So let me just keep going down the list over here and see if there's anything else. Odd CHF, this is exactly what I meant earlier. So you can see that price was below the pivots. We got a sell signal here. This would have been a nice sell. The only problem is that it's getting close to the zone right here. So as you can see right here, same situation, price came down, it got to the zone, and then it rejected right off. So that's probably what's going to happen here as well with odd CHF. If price comes down to the zone right here, odds are it's probably going to reject off it, and that's why we wouldn't take that trade. However, it would have been a good trade if we enter right here, but unfortunately, it wasn't giving off a strong, sell bias because it wasn't completely under the pivots. which is why I didn't take it. But it looks like it would have played out perfectly if I did. Let's see, odd JPY. So we have the same situation over here as well. Let me just take these off right here because they're irrelevant. I was going over this with James earlier. If you guys were looking at the mentoring session, I was going over a specific strategy that he was interested in. And I'll probably go over that a little later. He was basically trying to mimic the daily US 30 strategy, but for Forex. And I was trying to explain to him that, the Forex market moves totally different in comparison to the stock market, because the stock market usually moves pretty directional, while for Forex, price generally just ranges and then it'll move directional, sometimes, but then it usually just goes back into a range. So it's kind of hard to use the daily strategy when currencies are generally ranging on the shorter time frames. This is the 4-hour time frame, so you can see it was obviously pushing up, but this was from August 21st. So this was literally going on for like half a month. But most of the time, if you go on the shorter time frames, price generally goes sideways majority of the time. Like it went sideways over here for like an entire 2 days before it came down. But yeah, so let's go back to the pairs, and I'll just keep going down the list. But yeah, if you guys have any questions, we can stop and I can look at anything you guys want me to take a look at. Just feel free to put any specific pair that you want me to analyze in the Q&A, or if you guys want me to go over a specific strategy, I can go over that as well. I know there's some new people here that want to see the K2 pivot strategy. So once I'm done looking at all the pairs, I can go over that strategy and I can show you guys how it works. But meanwhile, I'm just going to keep looking down for any entries off the next candle close. Odd NZD, right here we have a bullish bias, and that's because price is crossing above the K2 pivots. Like I mentioned over here, when price is above the pivots are angling in the same direction and they're spread out. That indicates an uptrend. So as you can see right here, it looks like price came up. It retraced down right here, and then it looks like it's swinging back up for an uptrend. So for this specific pair, we would have a bullish bias. Just putting 2 and 2 together. Obviously, once price reaches above this area, once it crosses the K2SRs, then we can anticipate a nice bullish move to the next zone. So I probably wouldn't take this trade until it breaks above it, but once it does, then that'd be a great entry for a buy. But currently, there's just too many factors that are preventing us from entering, because like I mentioned with the K2 pivots, generally price rejects off the pivots and then it rejects off it again. So it's probably going to come down from right there, and then it could either correct back upwards or come back down. It just really depends on what happens once price gets to that specific point. So I'm going to keep going down. Right here, we have a sell bias, similar to what I analyzed for the last pair. Basically for here, price is below the pivots are angling down and they're starting to spread out. So this would indicate a reversal back to the downwards trend. So you can see right here, price was trending up, rejected off the K2 pivots, came down, went sideways for a little bit, and then continued back down. So the problem with this right here is, once price reaches this zone right here, price can either reject upward, correct back upwards because it was in an upwards trend originally, or it could continue its downtrend farther down. But we'll have to see how that correlates. I'm sure you guys are aware that, the stock market's like all over the place, and obviously that's going to affect the US dollar. So we'll go back and take a look at that later. I'm surprised that the US dollar is super strong right now because of what's going on in the world. But we'll see. I think there was COVID news that came out earlier today too. I don't know if there's any, let's see if there's any news right now. Yeah, no, it looks like a pretty clear day today. I'm not sure what's causing the market to go all crazy, but who really does know? It just happens. But okay, so odd USD it has a bearish bias. The only problem with this is that it's too close to the next zone right here. And that's why we can't take a sell, because we want it to be away from these zones. Because if you guys are new here, if you guys just look at the chart, so I'll just take the pivots off. If you look at the chart from our bird's eye view and I take off all the indicators, you can see that price generally moves from zone to zone. Price goes up to the zone, rejects, comes down. And it literally just ranges and bounces within the zones. So same situation right here, price might come down to the zone. It might reject upwards, might go even higher, but odds are it's probably gonna just keep bouncing within these zones. It can go lower, but once it breaks below it, so once it comes way down here, and that's confirmation that it's reversed into a downtrend, because obviously it was in an uptrend right here previously. And you can see right here just by looking at the K2 trend meter as well. It's been green most of the time, but you can see right here it's switched and it's red. So price might be swinging downwards. So I'll probably just give it some time, and then we'll confirm later, once it breaks below, whether it'll continue downwards. But let's keep looking at the pairs, CAD CHF. So with CAD CHF over here, I have everything marked up. Looks like it's in an uptrend right now, but then it came down pretty hard. As you can see right here, price is rejecting off the pivot. I mean, not the pivot, off the K2SR. So what might happen here is it might reject back up, or correct back up, I guess, and then, continue its trend upwards. You can see right here, like I mentioned earlier, price just pretty much ranges between the zone. So price comes down, comes up, rejects off the zone, comes down, rejects off this zone, comes up. Same thing, rejection, 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 and it literally just bounces around. So right here, price came up, rejected, came down, rejected, came up, rejected. Same situation, came down. It could either continue upwards, or it could break back down for a reversal. Looking at the K2 trend meter down here, you can see that it's blue. If it's blue, that means it's indecisive. So on some time frames, it's trending downwards, and on other time frames, it's trending upwards. So obviously right here, it's confused. So if we look at the pivots, this will give you a closer understanding as to where price is right now. You can see that price is attempting to reverse. Same situation right here. Price came up, then it came down, it tried to reverse, it failed, it shot back up. Price is down again right here. It can either break below and confirm a reversal downwards, or if it shoots back up, it could be a correction back for the uptrend, and then it'll just continue trending up. Because if you draw trend lines, you can see that price is technically still in an uptrend. So I mean, there's a lot of different ways to analyze this, but just looking at it from a bird's eye view, it's pretty indecisive. So let me look at the momentum indicator right here. We have a sell momentum. So if we get a buy momentum like we did right here, then it'd be a perfect buy entry, because you can see right here, if you took this trade to the next zone, it's like a nice profit for about 30 pips. Same situation right here. If we get a rejection off this zone right here, then this could be a nice buy. If we get a buy signal like that for another 30 pips to the next zone. But we'll need some confirmation for that, so I'll leave that alone for now, and I'll keep looking. Let's see, CAD JPY. Looks like everything's coming down. So it looks like the Canadian dollar is actually really weak. Yeah, same situation right here. I mean, let's see, odd CAD. That's going sideways. I'm just trying to find correlations, because if all the CADs are moving the same direction, odds are it's just going to be moving that direction as well. Same situation right here, USD CAD. So for USD CAD, it's going up. Like I mentioned when we started, if price is trending upwards, that means that the first currency is stronger than the second currency. If price is trending downwards, that just means that the second currency is stronger than the first. So as you can see right here, price is trending up for UCAD. So if price is trending up, this means that the US dollar is stronger than the Canadian dollar. So similar to the other pairs we were just looking at, for CAD CHF, price is coming down. So as it's coming down, this shows and indicates that the Swiss franc is stronger than the Canadian dollar. Similar with CAD/JPY, price is coming down. So it looks like the Canadian dollar is pretty weak overall right now. So if we were to take any trades, paired with the Canadian dollar, obviously we trade against it. GCAD right here as well. Maybe I should just call this trade right here because it is coming down, similar with all the other Canadian pairs. But yeah, so I'm going to keep going down the list right here. The last pair we looked at was CAD/JPY. Reason why we wouldn't take this trade is because it's rejecting off the K2SRs right here. So thing is, it could probably come up like that, or it could continue down. We won't really know until it happens. So we'd probably have to wait for that to happen within the next 2 hours. Right here, this is a perfect sell entry for CHF/JPY if this closes below this specific K2SR zone. So let me see CAD/JPY. Yeah, so CAD/JPY is heading down. AUD/JPY is heading down. CHF/JPY is heading down. It looks like the JPY might be strong right now. Literally everything is heading down. So that's, I should have taken this entry right here. It looks like JPY could have a sell bias because it's pretty strong compared to the other currencies it's paired against. So yeah, I should probably, I'm gonna mark this one because that could be a good sell. Just take this off. It's too late for that. Swiss franc JPY, Euro JPY. This could be good. Only problem is, it's next to the zone. It's a little too close. GBP JPY. Dang, I missed this trade right here. This would have been a great trade right here. Oh, this happened during the swap trade. That's why. Okay, that makes sense. So yeah, it looks like it dropped. Geez, it dropped 50, 60 pips almost. So, I mean, it's too late for that, but that would have been a great entry if I called it. GN over here, it's okay. Actually, sorry, let me go back to where I was. You see, your CAD. Yeah, I can't remember why I didn't call these trades. I have these marked. Well, I think these happened during the swap spread. So I had this marked up earlier. I wish I would have called it because it went straight to TP. Similar with Euro odd. I had this marked up from, oh, that's why. Because they all came up at 2 a.m. I was asleep during that time. And I wanted to take them late, but unfortunately, it was too late or it was in profit. So if you guys have access to the indicators, like most of the people do here, a lot of them took these trades on their own because we're all applying the same strategy. All right, so I'm on Euro odd. I'm gonna go over and look at S&P and NASDAQ. Angel's asking about S&P and NASDAQ, so let me pull that up right now. So I'll look over at S&P. Let me check this out real quick. All right, so let's start off with, I'll analyze it on the 30-minute because the 4 hour is just to, like no one here trades the indices on the 4 hour. So first we're gonna identify where the zones are. So I'm just gonna draw some zones right here. These are gonna be areas where I don't want to trade because they're areas of rejection. So let me just draw some zones right here. All right, so extend. So this is basically, I'll show you guys like from step by step, like how I analyze these charts. So basically this is a naked chart here. And the way that I analyze it is first I want to identify the zones. So in order to do that, I turn on the K2SR indicator version 2, and then it'll draw the zones on the chart for me. So instead of me having to identify where the rejection points are, they're already on the chart for me. So what I do is I just draw my own zones over the marked up zones just to clean up the chart so I don't have to have these on there. Got those lined up. I mean, it's not really necessary that you draw these zones up here, but it's kind of good to just have a good idea, you know, where all the zones are, just in case price shoots back up there. So you know where price might be rejecting from, but it's not necessary because price is so low. But the more important zones are going to be the closest zone. So the zones between each, you know, the upper zone and the lower zone. So right here, you can see there's no lower zone on 30 minutes. What I'll do is I'll go on the higher time frame, the 1 hour. There's still no zones down there. I'll go on the higher one, 2 hours. There's an upper zone right here, but that's kind of relevant to me because I'm looking for the lower zone. I'll go on the 4 hour. And there we go. We have the lower zone right here. So what I'll do is I'll just draw this zone right here. And then I'll go back on the 30-minute because that's where I was analyzing initially. Once I have the zones on the chart, I just hide the K2SR indicator. And there you go. We have the zones on the chart. And then this gives you a good understanding where price is likely to reject from. You can see price was consolidating here, came up, came down, rejected off the same zone, came up, literally just bounces from zone to zone. So right here, this is the next zone where price is likely to drop down from. You can see price is coming down. And then once it reaches this zone, you know, odds are it's probably going to spike up a little bit before either continuing downwards or reversing back up. S&P has been going down just like US 30 all day today. I think it's dropped so much today where they've activated the circuit breaker. So if you guys aren't familiar with circuit breakers, generally if price drops too much, or this is only for the stock market. If price drops way too much within 1 day, generally the government will just stop. They'll just freeze the market to stop it from continuing to drop even further. Let's see. Angel said she can't hear. Can you guys hear me? See, Angel said she can't hear me. Keith, can you hear me? Just want to make sure that my volume is working. Yeah, Keith can hear me. Angel, it might be your volume. You might have to turn it up. All right, perfect, guys. Yeah, so what I was mentioning was when price drops too heavily for indexes or just the stock market in general, the government activates these circuit breakers. What the circuit breakers do is they basically freeze the market to stop it from dropping so much. It allows people to pretty much get out of the market or have people move their assets around so they don't lose all of their money in 1 day, like what happened in the past, when the stock market crashed. This is the same exact thing that happened in March. So you can see right here, it rallied for a long time, but same situation, like right here. So right here in June, this thing dropped like crazy. I think the circuit breakers kind of stopped price from moving right here or somewhere right here. That's why it kind of slowed down. And then it kind of pushed up a little bit because the government was pumping money into the market. Like right here, this is where the Fed started pumping money. So price was dropping and they were pumping money. So it shot back up, but it didn't help. It just kept shooting down. The Fed could only pump so much money into the market until it literally crashes. This is where it was really bad. I think it was March. Yeah. So right here, this was crazy. So if you guys remember when this happened, so let me go on the higher time frame because it's hard to see on the shorter time frame. But see, if you go over here to February, I just remember this because this is when I quit my job and I started trading full time. I made so much money off like US 30 and not even S&P, just US 30. But pretty much right here, in March is when I quit my job because I was like, fuck this, I'm just gonna trade full time. So you can see right here, price like came down and then it stopped for a little bit and then it came back up because the Fed was trying to save the stock market from crashing. And this happened for like a good month. Like it was from like late February to like late March right here. And then this is where it stopped. And then it started recovering a little bit. That's kind of what's happening here. I don't understand like why it's dropping so heavily today, but you know, this is how the circuit breakers work. So basically price comes down, they freeze the market, they try to push it back up, doesn't work, comes down, freeze the market again. And then they just keep trying to freeze the market to, you know, to stimulate the market back up, just so like, because generally when it stops like that, people are like, okay, you know, maybe this is the bottom, it's time to, you know, buy back. But then that just doesn't happen and it just keeps dropping. So that's kind of similar to, I'm just showing you guys an example of like, you know, what happened in February. This is when COVID became widespread and businesses started closing and the market just started crashing like crazy. Same thing happened again in June, but it wasn't as crazy. It was just like one drop for like a couple days. So it was like from June 8th, it just dropped and then it came back up. You know, this might be what's happening here. I don't know if this huge drop is going to happen again where it happened for an entire month, but I mean, that's basically what happened today. So you can see right here from the 3rd, well, not even just today, but from the 3rd, it dropped, recovered a little bit, dropped, recovered a little bit, dropped. And then it looks like, you know, there's circuit breakers here because price isn't really moving. You can see right here, it's trying to recover a little bit, but I mean, who knows? It's probably going to keep dropping. So if we turn on the pivots, you can see that it's in such a strong downtrend. I know a lot of people were asking me if they should enter pivot entries right here, and you know, they would have been great entries. So if you took this pivot entry right here, looks like you'd be in like, you know, minor drawdown because it retraced up a little bit, but then it dropped down super heavy. Or this pivot entry right here, dropped down heavy. Right here is probably, it's gonna probably form the same thing that it did right here. So you can see it retraced up a little bit and then it dropped super heavy. Same situation right here. It might retrace up a little bit, but once we get a sell signal, like we did right there, it's probably going to drop pretty heavy again. It just really depends on, you know, if the government activates the circuit breakers or not. Let's see how many points did it drop today. So today's the 8th. It literally dropped on market open. So the 8th right here, geez, it's dropped nearly 2,000 pips. 1,500 pips right here. Or 1,500 points, I guess, or 151 points. I don't trade S&P, so I'm not really familiar with, you know, how the points work. But if this was US 30, I think this would probably be worth double. I think that's even what Wade said. Let me see what Wade said here. Yeah, see, Wade said looks like we will be hitting circuit breakers today. That's probably what happened right here. That's why it stopped and then it started coming back up. But yeah, it was. So the Dow Jones was down 316 points, and the S&P was down half of that. Yeah, 151 points. So, I mean, that's a huge drop, you know, compared to, because the thing is, if you're trading S&P, like, let's see, even if you're trading like the smallest lot size, you probably would have made a couple thousand just writing it down. I don't know if that's what Keith did. Keith said, I'm just living SPX right now. So I don't know if you're killing it, Keith, or what, but it seems like you might be if you took that sell. Because yeah, if you took these pivot entries right here, there's some great entries. But yeah, going back to your question, Angel, you know, looking at S&P, I personally can't say what's going to happen next because this is such an irregular move. Like, you know, we don't know if like the government's going to stimulate the market again, just push it straight up and then have people buy because they're like, okay, the bottom has been established, or if it'll keep dropping. Because, you know, look, going back to February, we were in the same situation here where people kept thinking that it was done dropping. Like people sold and then people are like, okay, market is recovering, right? but that's not what happened. You know, price kind of came up a little bit, came down, came up a little bit, and then it dropped super heavily. But this is an insane drop compared to today's drop. So let's see. This drop was like 541 points. You know, this is like 5 of today's. Like a lot of people are going crazy about today's drop, but these were like 5 of today's days. And then it kept dropping even further. So if you count the whole drop for the entire month, it dropped literally 1,200 points, which is insane for the S&P, because the S&P is supposed to go up. But yeah, you know, personally, I feel like the S&P is just, this is all speculation right now, because there's people on both sides. Let me see if I could find the let's see, S&P IG sentiment. So let's see where everyone's trading. Looks like 53% are long. So this is where it becomes, it's like straight speculation right here, because half the people are betting that S&P is going to go up, while the other half are betting that it's going to go down. Literally, market can go either way. It's like 50-50 at this point, because since there's 53% of people going long, this provides for a lot of market manipulation. It kind of gives them the opportunity to either push either way. Because if the banks want to push price down, they win. If they push price up, they win as well. So it's just, I mean, we'll probably have to give it some time, because once the sentiment goes, you know, more so in one direction. So if it goes like 60% long, then they're going to screw with people and they're going to shoot it down because they want to stop everyone out. Same situation if it goes 60% short. If 60% of people are short because people are betting that it's going to go down, you know, the banks are going to do the opposite. They're going to push it up. So everyone gets stopped out and they make their money. So, you know, it's literally a gamble right now. If you're going to trade any indice, I would probably take a small lot size. I wouldn't take anything too risky, because I think even Australia. So I think the Australian bank declared they were in where was it at? Somewhere over here. Yeah, I don't know where Wade put it, but it was somewhere here that yeah, you put it over here. Or maybe it got deleted. But I know there was an article earlier where it said that Australia was declaring that they're in a recession. So it was weird because everyone was buying the Aussie yesterday because it came up a little bit, then it dropped super heavily. So, you know, just looking across the board, like pretty much all of the indexes are in a downtrend. So Aussie's in a downtrend, NASDAQ is in a crazy downtrend. Like this is crazy right here. I don't even know how this even happened, because this tech stuff, like I don't know how the tech stuff was like super affected. I know that there was COVID news, but generally doesn't affect the NASDAQ, because NASDAQ are tech companies like Apple, Google, Facebook. You know, they keep doing good, but you know, all of a sudden on the first, like this thing just came crashing down. You know, alongside with the rest of the indexes. US 30 took a fall too. So let's see, US 30 for today. How much did it drop? This was a huge gap. Normally we don't see these gaps here for US 30, but that's how big of a gap it was. Like during midday, like midweek, we don't see a gap like this. This will happen over the weekend, but not like over the, you know, the 2 hours that the market was closed. But you know, just counting it from right here, it's dropped nearly 1,000. Like it's a lot of points for the DJ. Let's see, Keith said I fire caught some, and that buy you mentioned for a short period. Nice. Yeah, so Keith has been hitting it both ways. Keith, he scalped it, you know, he scalped it up, scalped it down. He made profit in both directions. That's probably the best way to trade it right now. I wouldn't hold any indexes long term unless it's, you know, it's an investment for you. Then yeah, but if you're trading it actively, I mean, you get burned pretty bad, because this is dropping pretty crazy. So let me go to the Owanda data, because currency.com data is kind of harder to analyze because the numbering is different. So yeah, like right here. So this dropped from this morning. So if you took the sell like last night and you held on to it, that's like 12,000 pips. So if you were taking this with, the smallest lot size, a 0.01, this would be a profit of, I don't know if I think it'd be about $1,230. But if you're taking like a mini lot, like a 0.10, this would be a 12,000 win one night. And that's not even a huge lot size. But yeah, just let me go back to S&P, because that's what Angel wanted us to look at. Similar to US 30, it could either go up or down. It looks like it's actually going to come back down. So it looks like it's leveling off right here. Man, I'm so tempted to enter a sell. The only problem with entering a sell is that, so say if you enter a sell and it hits another circuit breaker, then you're screwed because they're going to push price up. You just don't want to be holding on to something that you don't need to be holding on to. And I think it's too risky because I think the banks and the institutions right now, they're just waiting. They're waiting to see where people are going to be. If there's more people long, then they're going to push it down. If there's more people short, they're going to push it up. So if you are trading this, Angel, I would be careful. Probably take a small lot size. Keep your stop losses tight. Also, depending on what broker you're with, I'm assuming you're using an unregulated broker, like majority of people. The problem with that is if price can pass your stop loss, even if you have a stop loss place. So like say if you have a stop loss right here, right? But price ends up spiking up like crazy, like it just shoots, right? If that happens, then there's probably going to be slippage. And if you guys aren't familiar with slippage, I think we still have that picture here for KOT. I know a lot of people here use COT. But yeah, the same situation that happened with GU when the oil dropping was happening. This dude said, I don't know what the fuck's going on right now. I want my money back from KOT. I had a 25 pip stop and it's still not honoring it. He ended up going negative 21,000 off, this specific trade. This guy isn't even in our group. This was just like a screenshot that was shared from another group, where slippage occurred. And this is real. This happens. So, if you're using an unregulated broker like, KOT or Hugo's Way or anything that's unregulated, if price shoots right past your stop loss and you have, X amount of money in your account, you can literally go into the negative. And I mean, that's fine. If you go in the negative, you lose all the money in your account and then you'll just have to create a new account. But if you have a lot of money in your account, I would not trade right now, because this is a perfect time for slippage to occur. Because when the market's too volatile, like that can happen. It doesn't matter if you're buying or if you're selling. If your stop loss is anywhere over here and price spikes up or spikes down really hard and it passes right through your stop loss, I mean, you're pretty much screwed. And that's why I usually don't trade. Like I don't trade news. I don't trade when market's going crazy like this, even though it'd be a great sell. If my account isn't like super tight, like I don't have, X amount of money. Like you guys are familiar with my Hugo's Way. Like with my Hugo's Way, I only keep about 1 to 3,000 in there because I already know if Hugo's Way wants to mess with me and, do some slippage stuff like what just happened, what I showed you in the picture, that's fine because, I'm taking the risk of trading with an unregulated broker. So I know the risk that comes with it. If I end up losing all that money, that's fine. But I'm not going to keep like 10, 15,000 in that account and then have that slippage happen where it shoots up. And then I end up being, the negative 21,000. That's the way to protect yourself from using these unregulated brokers. Like they're fine to use if you use them properly. That's just what I'm trying to get across to you guys. Because I use them personally, but I'll never recommend them to, K2 member for that specific reason. But yeah, so Angel, if you're going to take this trade, I personally would have a sell bias just because of, how price is moving. But I would have your stop loss tight and, I would just scalp it. So I'd, catch this right down for like Let's see how many pips. Catch right down for like 100 pips or so, and then get out. The last thing you want to do is hold on to a trade, and then market goes crazy, and you end up blowing your account, which is common for a lot of people. It's nothing new. So that's S&P. Let me look at NASDAQ. I'm pretty sure it's the same exact thing. Same with NASDAQ. So, looking right here, price is trending down super heavy. Looks like it's retracing up a little bit, but then it looks like it's rejecting off the K2 pivots right here. So it might come back down. Obviously I would want to have a valid entry. So, in order for it to be a valid pivot entry, if you guys are familiar with the strategy, I'll just type it up here real quick so people could see. This is the K2 pivots strategy. For one, identify trend. Two, identify, I'll just put ID. I'll put ID because I know it takes a long time for me to type all this stuff. ID, tracement. Yeah, if you guys want the more detailed breakdown of the strategy, which is super simple, it's just like what I'm typing here. Go ahead and look on the website because you guys can still sign up for the free intro course, and it has everything there. You just won't have access to the indicators. And then lastly, and for the new people here, I know a lot of people here are new that want to sign up. If you want to sign up, just go on our website, K2 Trades. You can get your free access right here if you're not already a member. And then you can sign up for the free intro course. But if you're a member and you have access to the indicators, for the K2 strategies, you just go down to the K2 pivot strategy, and then you can learn it right here. It has the explanation of the indicators, how it works, why we use it. And then, even down here, it'll have the scalping strategy, intraday strategy, and the swing strategy. But yeah, so, going back to the requirements here, first you want to identify the trend. In order to identify the trend, you're going to look at the K2 pivots. If price is below the pivots are angling down and they're spread out like they are right here. Obviously, it's in a downtrend. You can see right here, it's in a downtrend. I'll just replay it back to this point. Next, you want to identify a retracement. In order to do that, you just want to make sure that price was going in the direction of the trend. So price came down. And then right here, price retraced from this point. So from this point right here, price retraced upwards. And then the next requirement, identify a rejection. It rejected right here. So as it rejected, that's all good right there. Lastly, you want to identify a valid K2 signal. So a valid K2 signal is going to be a sell signal with a red candle or a buy signal with a green candle. So this would be an entry right here as well. We're just looking at this right here. So first requirement, price is trending down. Second requirement, retracement right here and also right here. Last requirement, rejection. So this was a rejection for this entry. This would be a rejection for this entry right here. Last requirement, K2 signal. So once all those are met, you can enter on the open of the following candle. So right here, if you enter that trade, you would have hit TP. Same situation right here. So this is one win. Here's another one. Same requirements. Price is trending down, retracement, rejection, valid K2 sell signal. Enter a sell right there. Obviously, it hit TP. Same situation right here. This would be another one. Oh yeah, and so for the stop loss and TP, you just put your stop loss at the previous swing. So you could zoom out like that, use the short position tool, and then it could be subjective. So your stop loss could be here or it could be up here. It really depends on how you identify where the stop loss is. Palat said, even without the indicator, you think by following the steps we can make these trades? So Palat, short answer is no. The reason for that is that you can't fulfill the last requirement. I mean, you could even without the pivot. So look, this is how it looks like with no indicators, right? So first you can identify a trend. It's easy. You just, you could draw trend lines. Identify retracement. You could identify a bunch of retracements. You could, retracement right here, rejection, retracement right here, rejection, retracement right here, rejection. So you could technically, you could kind of eyeball those, but you wouldn't know where to enter. Like, how would you know where the valid K2 signal is? So if I turn on the indicator, you know, it gives us perfect entry points. Like right here, like how would you identify this as an entry point without the indicator? Because you could literally, so let's see, I'll just replay this over here. Like it's kind of hard for you to tell. So if I take all these off, it's kind of hard for you to tell because right here, I mean, this wouldn't be a downtrend, right? Because price, well, I mean, it would be a downtrend, but it would have broken the trend line right there. So you wouldn't even have this other downtrend right here. So if you do that, like you can see that the trend's down, but you wouldn't know exactly when to enter. But if you have the K2 indicator, you'll know that you could have entered right here. You could have entered right here. You could have entered right here. You know, I mean, unless you know how to call entries, it just really depends on you. I mean, you can go ahead and try it, but you know, without the indicator, these indicators, they detect momentum swing. So obviously, you see a swing down, you take a sell. See a swing down, take a sell. Swing down, take a sell. But you know, you're kind of playing a guessing game unless you have the indicators, because literally any of these could be an entry point. But how would you know that that'd be a good entry point? So say if you took this right here, and then you see like a little retracement point somewhere like right here, right? You wanted to take a sell. I mean, you could take a sell, but that might be a late entry. So if you turn on the indicator, the entry should have been way up here. So you would have entered super late. So technically you could apply it if you know how to identify the entry points, but without the indicators, it's kind of hard for you to tell, because even if I take these trend lines off, see, if you were doing this from scratch, it would have been in an uptrend, right? The only reason we knew it was in a downtrend was because we had the indicators. So you can see price was crossing below it right here. So as price crossed below it, like right there, you would have known that it would have been a downtrend, but you wouldn't have been able to identify that without the indicators. So I mean, it's really up to you, Blood. I mean, you know how to trade on your own. So if you know how to identify these entries, you could identify them, but you won't be using the same strategy, because obviously in order to apply the strategy, you would need to identify the trend using the pivots. So these pivots give you an accurate representation as to where price is trending at the time. Price is above, obviously it's trending up. Price is below, it's trending down. See, price is above, price comes below, and it's trending down. But yeah, I mean, if you want to go and practice it on your own, you can. But there's literally going to be no way that you can identify the exact same entries as we would using the indicators, because the indicators they're what I see. But obviously everyone identifies the market differently. So, I mean, you can give it a try, Blood. Let me know how that works. And then, maybe you can see, where you identify the same things I do. But yeah, I mean, all of these indicators are my indicators. So there's like, you can't go use a different indicator and just find the same exact thing, because like these are all created by me. So there's nothing that's, similar. There's nothing that's close enough to match, what we're identifying using the K2 indicators. So see, like these right here, could have taken all these entries using the indicator, but without the indicator, it's kind of hard to tell, because you're looking at a naked chart like that. So it's kind of hard to identify where your entry points are. But yeah, Keith said wait until after 8 p.m. I agree with that too, because it's still early. So Asia session just opened up, and it's probably just gonna move pretty slow until then. It doesn't really look like there's gonna be much movement. So there we go. We turn on the indicators. Same situation right here too, Blood. Like this is probably easier to look at versus the NASDAQ. So with US 30 right here, obviously we could see that the downtrend started right here. But if you didn't have the pivot, so if we rewind to this point where it just started, see, it would still look like it's in an uptrend. Or we could even start from right here. It really depends on how you would identify it. Let's see, if you had this right here, you'd be able to tell when it's dropping. There's a lot of different ways to apply it. I mean, you could ask, I'm trying to think of who else. Because I spoke with, let's see if James is in here. Yeah, so I had a one-on-one with James earlier, like an hour ago. I had a one-on-one mentorship. If you guys want to look at that, see if I can find it right here. YouTube. Yeah, so if you guys go to the YouTube page, the K2 YouTube page, some of my mentoring sessions are live on there. So I had a mentoring session with Karen yesterday. It's right here on the 7th. Earlier today, I had a one-on-one session with James. If you want to look at that as well, you can see that we were explaining different strategies because James likes using the Fibonacci, but I don't use the Fibonacci. But the thing is, we were able to identify a strategy that he could apply using the K2 indicators with Fibonacci so that he could have some sniper entries. That's the whole point with the K2 indicators. Like for the K2 indicators, I provide the strategies that I apply and the indicators, but this is just a foundation. You guys don't have to follow the strategies or what I teach on the indicators. Basically, these just teach you what the indicators do. We have the momentum indicator, we have the SR indicator, we have the version 1 SR, we have the pivots, and then we have the trend meter. These could all be used interchangeably. If you guys have a strategy that you guys like to use, you guys can use any of the K2 indicators to make that strategy better. Because obviously there's always going to be an issue with one strategy. There's going to be a strategy where you need something extra to make that strategy complete. And that's what the K2 indicators do. And that's how all the strategies are pretty much developed. All the strategies cover one base. So for the momentum indicator, we're able to identify the direction of momentum. So obviously if price is going up, you want to ride that momentum swing upwards. If price is swinging down, you want to ride that downwards. But the problem with that is you don't know which direction to trade. So in order to determine, the direction of the trend, you can use the trend meter or you can use the pivots. So obviously if price is above, you can take buys. If price is below, you can take sells. If price is above, you take buys. And then on top of that, you can use the K2SRs because generally price will go from zone to zone. So if you take all these off, you can see that price generally goes from zone to zone. So price goes from zone to down here, to up here, to down here, and price just pretty much repeats itself. It goes from each zone to each zone. And if you guys are familiar with indicators, you guys know that the zones automatically replot. So you can see here as price moves, the zones will create new zones and it'll reestablish the old zones so that you know where not to trade. Because obviously, if you're taking a buy trade or if you're taking a sell trade, you don't want to trade when it's near a zone because obviously once it rejects off it, it's going to go in the opposite direction. So same situation right here. If you're trading this and you're taking, a sell right here or a buy, you probably wouldn't want to enter a buy because there's so many zones right here. And what's going to happen is it's probably going to, reject off it. Or then it'll consolidate sideways. But yeah, Plod. So, there's a lot of different ways to apply the strategy. So basically, if you're applying you know, a trend continuation strategy, you would just use the K2 pivots with the K2 SR. So if price is trending down and you get a sell signal, you just take a sell like that. Same situation right here. You get a sell signal, take a sell like that. The opposite direction, if price is trending up, you take a buy. Another one right here, and so on. But yeah, I mean, you know, it just really depends on what strategy you're trying to apply. But yeah, Plot, if you know, if you have a specific way that you want to trade, you know, the K2 indicators can be used pretty much. It's pretty versatile for any type of strategy that you wanna trade. But me specifically, you know, I'm a trend continuation trader. So I trade in the direction of the trend, and then when I see momentum swings in that direction, I trade with it. So obviously, price is trending up. I get a momentum swing upwards. I'll take that buy, hit CP. Same situation here. But yeah. So I mean, I could go over the specific strategies later. So if you guys have any specifics that you guys want me to cover, you know, I'm more than welcome to go over them and break down any indicators that you guys have any confusion with. And if you guys have any questions, you can probably, or if you guys have any specific K2 questions, you can look at the one-on-one mentoring sessions, because a lot of these people have the same questions that you have. So if you guys are having problems with the K2 strategies, you know, they probably asked it in these mentoring sessions, and these are one-on-one. So these are me talking to them face to face. So like, you know, I'm pretty much breaking it down step by step exactly how to fix the situation, and how to overcome, you know, that little hurdle that they're stuck on. Probably delete that. But yeah, so yeah, guys, let me go back to the charts. Angel, I looked at Nasdaq and S&P. They're both in some pretty strong downtrends. So I think for Nasdaq, if we get a sell signal again, so right here it's coming down. I mean, it's coming up right here. It's retracing up. But once we get a sell signal like we did right here, then it would be a good entry for the pivot strategy. I'm going to put the detailed requirements here just so people understand, because I know there's a lot of new people here, and if I just put ID retracement, they think it's something like something that you can use using a different analysis. So you're going to identify the trend, the K2 pivots. For the next one, you're going to identify retracement, pullback, and then third, identify rejection of K2 pivots area. And this is another one too, Palad. So for this specific requirement, you would need the K2 pivots, because you can't identify, like, the rejection can't be like super high up somewhere. So let me look for an example somewhere. Like this right here. So obviously, or no, like right here. So obviously, if price is going up and then it comes back down, this rejection is way too far. This is already like giving indication of a reversal. So if you don't have the pivots, the problem with this is you don't know how far is too far. So price is trending up right here. But if you were to look at this from this perspective, you can see that it's still technically, or it could still classify as an uptrend. So if you were to take a buy right here, because you thought it was at a low, then you would have ended up, actually right there. So if you took a buy right here because you were thinking that if you're trying to apply the requirements here, so you identified the trend, price is trending up, identified a retracement, so price retraced down this far, and then you saw the rejection right here, it would be hard for you to identify how far is too far, because the thing with the pivots is that you can see how far it pushes back. So obviously if price comes up and then it comes down this far, This would be way too far because how many pips is that from the pivot area? It's like 200 and, yeah, for NASDAQ, this is about like 231 pips. It's a huge difference if it pulls back to, this point right here and then comes back up. But if you don't have the pivots, it's kind of hard for you to tell if it's too far or not. So there's another issue that you're going to run into if you try to apply the strategy, without the pivot, without the indicators, because you're not going to be able to identify, how far is too far. But yeah, Angel. So looking back over here, we have a buy signal. So we have identified a downtrend, identified a retracement right here. So this would be requirement number 2, the retracement. And then identify a rejection. So if price comes up and then it comes back down from right here, this would be the rejection point. So the last thing we need is a sell signal. So if we get a sell signal like we do right here, then it would give you confirmation of a pivot entry downwards. So you could take that trade and then pretty much write it down as far as it goes. But that could happen, at any time really. So you'd have to just keep watching it or set an alert just to notify you when we get a sell signal. Yeah, so for NASDAQ, obviously if there's a pivot strategy entry, I would take a sell. And then same with S&P. It's the same situation. So if you look at both, they're both lined up the same way. Same situation right here. Oh, whoops. If you identify the trend, you can see that price is trending down. Identify a retracement. Here's the retracement. Identify rejection. This might be the rejection point if it closes like that. So last thing here, you need a K² signal. So that'd be the last thing here as well. If you get a sell signal, then you can continue writing it down. But like what Keith said, he said to wait after 8 p.m. So, you'd probably have to give it some time because price is probably going to move a little slower from now until then. But you can see right here, if we get some more nice red candles coming down, then it would provide for a good entry for a sell. But yeah, so that looks good for S&P and NASDAQ. Let's see if there's any other questions. Let's see. Yeah, it looks like we don't have any current questions right now. So if you guys have any other questions, feel free to put them in the Q&A. Otherwise, I'm going to go back to the Forex pairs that we were looking at earlier. So we left off on Euro odd. Keep going down to Euro CAD. No entry here because it's too close to the zone. Euro CHF. Does it look like there's, turn on the pivots. So price is still in an uptrend right here. So looks like it might reject off the K2 pivots right here and then shoot on up. So if price was to close above this specific point, then it would provide for a good buy entry. But there's nothing there right now. Euro GBP, man, it looks like we missed this trade because this happened during the swap spread. But this would have been a valid buy right here for about 50 pips. Yeah, I don't know if anyone's in this trade. I think there were some people that were talking about it in the chat. No. And we'll come back to it. I mean, if anyone wants to take this trade, it's still a valid entry. But I didn't call it because it happened during the swap spread. I've been looking at all the JPY pairs. They look like there are some good sells. So I'm probably going to take this one once this candle closes in about 1 hour. I would like to take EJ, but it's getting close to this zone right here. So it might reject off it That's what I'm worried about. If it closed below it, then it might be a better entry, but currently it just looks too risky. Let's see, what did we leave off? Euro CAD. Let's look at that already. Euro NZD. This is a trade that we still have active right now. Euro NZD, it's about to hit TP2 over here, 50 pips. We're probably just gonna have to give it some time because it's moving really slow. But if you look at all of the NZD pairs, it looks like the NZD is super weak. So Euro NZD right here is going up. Our other NZD pair over here, CHF, is going down. NZD JPY going down. NZD CAD going down. So pretty much if you look across the board, you can see the correlation for all the NZD pairs. No, this would be different because it's odd NZD, but looking at all the other ones that are crossed with NZD, Euro NZD, since price is going up, that would signify that the euro is stronger than the New Zealand dollar. Similar with the GBP is weak though. So looking at Euro NZD, NZD CHF, you can see prices going down. That means that the Swiss franc is stronger than the NZD. NZD CAD, this, since it's going down as well, this indicates that the Canadian dollar is stronger than the NZD. NZD USD, same situation right here. So you can see all the NZD pairs, they're all heading down. So they're all correlating and giving confirmation that the New Zealand dollar is weak right now. So that's why I think this is going to continue down, hit our TP2 right here. Similar with Euro NZD. I think this is going to keep pushing up and hit our TP2 right here, if you guys are still in it. Let's see what else we got. GN, GU. This looks like this could be a good sell entry too. Once it closes, looks like there's news on the 9th at 6 a.m. So that's fine. That's tomorrow morning, but that gives us enough time for us to come down. So let me see this right here. GN. This was an entry here. I didn't take it, unfortunately. Looks like it could have been good, but it's going against the other trade. So obviously I wouldn't want to take that trade. GCAD looks good, actually. It's coming down pretty heavy. Let's see. Yeah, nothing there. NZD CAD, nothing there. Reason why I'm saying nothing there is because it's getting close to the zone. Usually what happens when it gets to that zone is it'll reject right off it. So that's why I wouldn't want to take that trade. But the NZD does look weak, so what might happen here is it might break below the zone and continue downwards. Same pair from earlier. So looking at GU right here, this does look like a good sell. I just want to look across the board. So in order to see cross correlations, we'll look at GU. This shows that the US dollar is strong, which is really weird because the indexes are super weak. But matching with AU, see AU is weak too. So since it's coming down, this shows that the US dollar is stronger than the Australian dollar. What other USD pairs? Euro USD, this is coming down as well. It looks like the US dollar is very strong right now. So this might be a good entry for NZD USD actually, because the NZD is weak across the board, but the US dollar is strong across the board. So you can see here UCAD's going up, USCHF going up, USD JPY. This is different because the JPY is a safe haven currency. So that's why it's probably going down. It's, they're completely opposite pairs. But looking at all of the other US dollar pairs across the board, they're all going up. Even for the, US dollar against the Singapore dollar. Like, this gives you strong confirmation that the US dollar is strong right now. Unusually, but it's still strong. Even with gold. So, looking at gold right now, the US dollar is strong against the gold. So I might go off a whim and I might just take a NZD USD entry right here just because the correlations are so strong. I mean, I might wait for a retracement and then take a write down, but overall looks like it could be a good sell. So I'm probably going to take this trade once this closes. So once this closes right here, I'm going to take this GBP USD sell because it's such a great trade. Just, you know, adding up all of the different correlations here for 100 pips. See what else we got here. I think that's about it. Doesn't look like there's anything else here really to look at, because a 4-hour candle doesn't close for another 51 minutes. So technically, we still have a lot of time between now and then to make an entry. So I think meanwhile, we could probably look at other pairs like, I mean, I really want to take US 30 for a sell, but I still need to wait for that sell signal. Otherwise, the market's like really slow today. I mean, not today, but you know, just right now, because we're in an Asia session. So we still have our Euro NZD open for a buy. And it was so close. Look, check that out. It was so close to our TP2 for 50 pips, and then it retraced down. You know, I hate when that happens, but it happens. Same with our NZD CHF. And this is why I don't enter trades too early. Like, we have to wait for the candle to close before we make an entry, because stuff like this could happen. Like, you know, last thing you want to do is enter a trade when it's at its very low, and then it retraces upwards. Because then if that happens, then you're screwed, because you're going to be stuck in this trade. And then you'll be in some drawdown instead of just waiting for, you know, a perfect entry. Let's see. Yeah, the only things I have in mind to take, I'm just going to take this off because it's way too late. So we totally missed this trade. You know, if we did take it, it would have dropped straight into profit for about like 35 pips right here. But there is, it's just way too late, because we would have hit TB2 and we probably would have gone stop down profit already. So I'm just taking that off the watch list. We have CHF JPY right here for a sell. The reason I identified this was that this is a K2SR zone strategy entry. Obviously, momentum swinging down. It broke this structure right here, this K2SR zone. So this would give confirmation for a movement downward. So once it broke down below right here, you know, odds are it's going to come shooting down to the next zone over here before either rejecting off it or continuing downwards. So I will keep that alone. Euro odd. This is something that I looked at earlier too. So this would have been a valid entry, but this happened at 2 a.m. When I was sleeping. So there's, you know, obviously we didn't take this trade because I didn't call it. But, you know, for those that did take it, it would have hit TP2 already. So I'll just take that off. I just want to keep the ones marked that I actually want to take. So the reason why I was looking at Euro JPY is because it correlates with the Swiss JPY over here. So the Swiss yen right here is in a strong downtrend. And that's because the yen is very strong right now. So I'm just watching this. If this closes below this zone right here, then it could provide for an entry, but we'd have to wait for that. GN, that's there, and GU. But yeah, guys, so it looks like, you know, we've pretty much looked over all the pairs right now. It doesn't look like there's any more questions at the moment. I did have a mentoring session earlier, so I think, you know, all the questions that were needed were already answered earlier. So it looks like I might be getting off a little early today, guys. Just because, you know, we have so much time between now and 6 p.m. and there isn't really much to look at because the market's pretty much dead currently. So, you know, unless we get some movement in the market currently right now, these are the ones that I'm going to be looking out for on the next candle close, which is in 47 minutes. I'm going to be looking for a sell for CHF JPY. a sell for Euro JPY possibly. They both correlate. They both move in the same direction. And then lastly, I'm going to be looking for a sell for GBP USD. And that's because the US dollar is strong across the board. But yeah, guys, I think that's about it for tonight. You know, it's been a slow week due to the holidays, but not a slow week for the indices because the indices are just crashing down like crazy this entire week actually. So from the 7th until now, markets dropped about 122 points. That's crazy for US 30. So hopefully you guys aren't hanging on to these for a buy because it looks like it's going to continue dropping down. You know, I can't really say when it's going to come back up. It'll come back eventually, hopefully. But, you know, other than that, I'm not really sure what would happen from now until like, you know, a few months later. Because due to COVID, you know, we might be going to an even deeper recession. So we'll just have to see how this plays out from now until next month. But yeah, guys, so I guess that's about it for tonight. This will be uploaded to YouTube shortly. If you guys have any other questions, you know, feel free to reach out to me on Telegram or any other social media, and I'll be available in the chat. Otherwise, thanks for showing up, guys. I'll give you guys some signals in about 40 minutes if, you know, these 3 pairs play out. Otherwise, you know, I'll keep monitoring for any other trades. But for right now, market's just too slow. There's not really much to look at. So I'll just be available in the chat, guys. All right, guys. So I'll talk to you guys later.